Good morning. I'm Dr. Wilson Pearl, Associate Professor, Department of Corporate Secretaryship of KCS Kasnada College of Arts and Science. We are going to do the illustration number 6. First, read the sum. The company has 10,009% redeemable preference shares of 100 each, fully paid. The company decided to redeem these preference shares at a premium of 10%, which means they are going to pay extra 10%. Okay, what is the premium value? What is the preference share value? 10 lakh into 100 will give me, 10,000 into 100 will give me 10 lakh. Out of 10 lakh, 10% will give you 1 lakh, which means at the time of issuing the shares, I got 10 lakh from redeemable preference share. But at the time of redemption, I have to pay 11 lakh. That is what is called premium. Then the company makes the following issue. The company issued 6,000 equity shares. That is what is called fresh issue now. Okay, at the time of redemption, they are issuing equity shares. That is fresh issue. 6,000 equity shares, rupees 100 each, which means we got 6 lakh through fresh issue at 10% premium, which means 60,000 is there. Then 4,000 8% debentures are also issued. Okay, then the issue is fully subscribed and paid. Allotment were made. The redemption was duly carried out. The company has sufficient profits. Okay, the problem is the company has sufficient profits. You can take as it is. Then we'll look at how it is done. The answer. Look here. The first, the formula, redeemable preference share capital fresh minus fresh issue, the CRR formula, 10 lakh minus fresh issue. How much fresh issue is there? How much is the fresh issue? What is the fresh issue shown in the sum? The company decided to issue 6,000 equity shares, isn't it? 6,000 equity shares, rupees 100 each, which means 6 lakh. So 10 lakh minus 6 lakh will give me 4 lakh. That is CRR. Okay. Now for fresh issue, I'll write the entry. Fresh issue is made at 10% premium, isn't it? Bank account data, equity share capital to security premium. Okay, 60,000 is there. Then the debenture is also issued now. Bank to debentures 4 lakh. This is the first new entry. Okay. Now next, for the preference shares are redeemed at premium of 10%. Therefore, redeemable preference share capital account data 10 lakh, premium redemption 1 lakh to redeemable preference shareholders 11 lakh. Then for transferring this premium 1 lakh, we have to pass the next entry. That is fifth entry. Security premium account data 60,000 because the fresh issue got 60 security premium. Then P&L appropriation 40. Then premium redemption 1 lakh. Okay. Now next, I have to look at the CRR. What is the CRR I have to take? 4 lakh. So we will see the next page, next slide. Redeemable, that is P&L account data to CRR 4 lakh. Then redeemable preference shareholders to bank 11 lakh. So that's it. Okay. There's no need to do your balance sheet because you're not given a balance sheet. Okay. So that's it for this sum. Then we'll go to the next one, illustration number 7. You are given a balance sheet, which means you have to redo the balance sheet again. Okay. Don't forget this. Now, what are the preference shares given the sum? 4 lakh. On the above date, the preference shares has to be redeemed. For this purpose, 2,000 equity. Okay, which means the fresh issue is there. 100 rupees shares are issued at 110, which means 10 rupees premium. The company also decided to issue debentures for totaling 3 lakh. The debentures, shares and debentures are immediately subscribed and paid for. Therefore, the preference shares are duly redeemed. Okay, what is the difference between the previous sum and this sum? Previous sum is without balance sheet. Now this sum is with the balance sheet. That's it. Okay, almost everything is same. First, fresh issue. What is the we have to do the formula first. What is the formula for CRR? Redeemable preference share capital 4 lakh minus fresh issue. What is the fresh issue given here in the sum? The quantity is given there. What is the quantity? The sum problem says it is 2,000 equity share of rupees 100 each, which means 2 lakh. So 4 lakh minus 2 lakh. Fresh issue is 2 lakh. The remaining is 2 lakh. That is CRR. Okay. Now, next, the first entry. Now, do you have partly paid up? There is no partly paid up. Now, second entry, if there is any sale of asset, there is no sale of asset. Then directly we will go to the third entry, fresh issue. There are 2,000 equity shares issued at 100 rupees at a 10% premium. So, we will get out of 2 lakh, 10% will give you 20,000. 10 rupees means 10%, which means 20,000, which means 2 lakh 20 bank account data, equity share capital 2 lakh to security premium 20,000. Okay, so that's it. Then debentures are issued, bank to debentures 3 lakh. Then next entry for for redeemable preference share capital to preference shareholders. The redeemable preference share capital account data 4 lakh Okay, the problem is silent with regard to redemption of debentures at premium or par. Okay, we assume it is only at par. So redeemable preference share capital account data 4 lakh. Redeemable preference shareholders 4 lakh. That's it. Next. Yeah. Next one will be your after the you'll have a premium. There's no premium, therefore we don't have premium metric. Then next one will be CRR. CRR P&L account data are 2 lakh to CRR 2 lakh. That's it. Then next entry will be bank loan or bank overdraft. So look at the balance sheet. You have 5 lakh in your bank balance. What is the amount required to settle the preference shares? Only 4 lakh. So more than enough. Therefore bank loan is not required. The last entry, redeemable preference shareholders to bank 4 lakh. Okay, that's it. We prepare a balance sheet after this. We'll look at the answer now. So like here, 4 lakh minus 2 lakh, 2 lakh. Then bank account data, equity share capital to security premium to debentures. I've made both together, debentures and equity shares together. Okay, 5 lakh 20. Then redeemable preference share capital, redeemable preference shareholders 4 lakh. Okay, then CRR, there's no premium redemption. Therefore, the entry is not there, fifth entry is not there. Then P&L account data to CRR 2 lakh. Then redeemable preference shareholders to bank 4 lakh. After this, since the balance sheet is given, you have to reproduce the balance sheet again after the redemption. Look at the balance sheet now. The equity share capital has become 12 lakh. Earlier it was only 9 lakh. So you issued, sorry, earlier it was only 10 lakh. Now we have issued 2 lakh more. Fresh issue. Therefore it is 12 lakh. Then P&L. Out of 3 lakh, 2 lakh is transferred to CRR. Only 1 lakh is there. Then CRR 2 lakh is there. The newly created reserve that should be shown in your balance sheet. Then security premium 20,000. Then debentures are issued, isn't it? Therefore you write under the heading non-current liability, that is long-term borrowing, 8% debentures 3 lakh. Then current liability, you know, it is credit as only 2 lakh. Then your asset side is fixed asset is there 14 lakh. Then current asset is nothing but bank balance. I've given in lakhs. Okay, 500 is nothing but 5 lakh. We assume it is 5 lakh. There's a shortage of space, therefore I wrote that. Then 5 lakh 20. Total is 10 lakh 20. Out of 10 lakh 20, 4 lakh is used for redemption. The remaining is 6 lakh 20. Okay, the total of the balance sheet is 20 lakh 20,000. That's it. Okay, this is all for this sum.